What's going on, guys? It's Kuz. In this video, I'm going to be showing you guys how I find my key levels. The concept of a key level is pretty simple to understand. It's an area in the chart where you see a big rejection, and this could be to the upside or the downside. The upside, that would be resistance. The downside, that would be support. To find the key level, you want to go in your chart, start from the higher time frame, and work your way down. So right now, I am charting the NASDAQ on the daily, and I'm going to be showing you guys an example of an area that's not a key level. Right here at 13,200, we can see that there has been a rejection right here and right here. And the reason this isn't a key level is just because it's only been rejected twice. We want to see at least 3 rejections to consider it a good key level. Although price could reject here again, the probability is lower than if it had been touched at least 3 times. So that right there is an example of something that looks like a key level, but it's not a key level. So now let me give you guys a good example of a key level. Starting off right here at the 12,834 area, we plotted the line down so you guys could see it better. Right here, we see a rejection, right? So that right there, we can see that there's some resistance at that area. Right here, it broke above but sold off. Right here, it broke above but sold off. Broke above but sold off. Right here, it almost tapped, but it didn't. And then right here, we can see a perfect rejection from that level we just drew. And right here, we could see that this level broke, acted as support, and then price traded, came back down, used it as support, traded, came back down, used it as support, traded, came back down, used it as support, and now we're trading above this line. So this key level started from a resistance point, and then it turned into support when price broke above. And that's something to know with key levels. When price is tested several times, it flips from resistance to support, and then the same thing for the downside. It flips from support to resistance. And that's how you know it's a good key level, if it's acting as both resistance and support. Now that we found a good key level, we want to go through our charts and look for something that presents a similar situation. Right here, I could see that this 12,251 level is a key level because it acts as resistance. Support, 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 broke below, resistance, broke above, support, and so on and so forth. You can see that this level has been tested several times, and it's obviously an area of interest where we see either a strong rejection or a breakout. So that right there is another key level. So now that you guys know what a key level is, you want to start from the higher time frames and work your way down. The higher the time frame the key level is on, the stronger it will be. I usually stop drawing them at around 15 minutes because everything down below is really not that high of a probability compared to the levels that are drawn in the 15, 30, 1 hour, 2 hour, 3 hour, 4 hour, and daily. So you want to move down to the 4-hour chart and look for an area that acts just like I explained to you. It has to be tapped at least 3 times. It has to be an area that acted as resistance and support. So immediately here at 13,073, I can see that this is a key level because price acted as support right here multiple times. Resistance, 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 support, 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 and now resistance. So this is another key level on the 4-hour time frame. So now what you guys want to do is flip from all these time frames all the way up to the 15-minute and look for key levels and plot them on your charts. I'm going to speed run myself, drawing key levels. This way you guys can see how I draw them. So now what you guys want to do is flip from all these time frames all the way up to the 15-minute and look for key levels and plot them on your charts. I'm going to speed run myself, drawing key levels. This way you guys can see how I draw them. So now that you guys saw me speed run through my key level drawing session, I just want to explain to you guys that key levels should be used as entry points or take profit areas, just because you know there's a higher probability of a reversal at that area, whether you're looking to go long or short. I don't trade the NASDAQ, but I charted it just so I could give you guys an example. I trade the S&P 500, and you can see how these key levels work. This was today, April 20th. We could see that this was a key level mentioned in pre-market, and we've seen two strong rejections from this area. A level mentioned in pre-market was also 4170, and that was the top of the day. So this is an example so you guys can know how key levels could be used throughout the day. Another very important recommendation I have is to draw the 30-minute opening range. That's on the 30-minute time frame. You want to mark the high and low. And for this session, that would be at 16:30 on Eastern time. That is when the market opens. So we drew a line at 4144 and 4156. And that's a key level because it's the opening range, and you should use that level to guide you throughout the day. If you're above that, you should be looking to long. If you're below that, you should be looking to short. So this was just a quick video showing you guys how I draw my key levels and how I use them throughout the day. I obviously didn't draw all the key levels I usually do on the NASDAQ just because I don't trade it, and this was just an example for the video. But you want to be spending a good 30 minutes on this each day, back testing your key levels to make sure they work and they're efficient. So that's pretty much it for this video. If you have any questions, please leave them down below. If you found this video to be helpful, consider dropping a like. That's been it for this video. I'll see you guys in the next one. Peace out.